Beijing firing back at the U.S. today, saying it will respond firmly and forcefully to any U.S. sanctions tied to Russia-Ukraine. The move hitting Chinese stocks hard. Crane shares China Internet ETF KWEB finishing down nearly 10%, its worst day since December. For more, let's get to Stephen Roach, the senior fellow at Yale University's Jackson Institute of Global Affairs and a longtime expert on Asia. Stephen, great to have you with us. Great to get your thoughts here. How does this play out? Because it seems like the U.S. and China are in somewhat of a game of chicken. I put sanctions on you, you put sanctions on me, and I'm going to be tougher than you, and you're going to be tougher than me, et cetera, et cetera. Who has more to lose?
Well, we've been seeing this tit for tat now for 4 years with tariffs and sanctions on tech companies. But, this is a different story. China is really, I think now, Melissa, at big risk of being tainted by its newfound partnership with Russia. You saw the great handshake on the opening day of the Beijing Olympics. They signed a new, quote, partnership agreement with unlimited potential. So China is at risk of being tainted by this and judged guilty by association as Russia's only partner. It can't afford to take that risk. It'll be isolated just like Russia. And you know as well as I do, China needs the world probably more so than Russia.
Then why would we even hear reports that Chinese oil companies were looking to buy stakes in Russian oil companies? I mean, we're not getting many signs, are we, that China is willing to sort of back away with Russia? Could they possibly step in and broker some sort of a peace agreement? Are they in a position to do that?
I think this is their moment to do exactly that. They have this long-standing sort of sacrosanct value that goes back to the 1950s with Zhou Enlai, the so-called 5 principles of coexistence, which stresses respect for national sovereignty, territorial borders, and non-intervention in other nations' domestic affairs. They cannot afford to condone what's going on in Ukraine right now. So, this is their moment to step up. And I've written a piece overnight that suggests, a number of things that they should do, including calling a G20 emergency meeting for leaders of the 20 leading nations around the world, making a large donation to UNICEF to help the Ukrainian children in distress, and stepping up. I mean, they are the world's best on infrastructure. I've urged them to make a major contribution to the rebuilding of a war-torn Ukrainian infrastructure. There's a lot they can do if they really want to deliver as a global leader that they've told us they deserve to be thought of.
Hey, Stephen, it's Tim Seymour. Thank you for your expertise here. And I'll just weigh in and say that I've watched China be addicted to Russia's industrial and energy inputs for years and finance Rosneft's debt, et cetera. So I kind of feel they'll continue to do that. My question is more China's tech sector, in your view, on Big Brother taking apart and dismantling the Alibabas of the world. And China, on some level, has been their own greatest enemy in terms of this influence, in terms of the market cap of their stocks. Can you comment on that?
I agree with that, Tim. I mean, the most dynamic sector in the Chinese economy over the last 5 years has been these large, creative, innovative internet platform companies. And now, under the guise of common prosperity, or whatever they want to call it, they are putting enormous pressure on the entrepreneurial activity and the incentives to build new companies that have, yes, created wealth in China, as they have for entrepreneurs in other countries. And by going after it, I think they're biting the hand that feeds them.
Stephen, one last question before you go. China seems to be at a crossroads right now. Can you see it taking the path where it sort of sides a little bit more with Russia? It's willing to risk the sanctions of the U.S., knowing that U.S. companies will be hurt just as much as its own economy, and that it sees the way Russia has become isolated because of the sanctions that the U.S. and its allies are willing to put on it, and it doesn't want to be in that position in the future, and so moves to further isolate itself.
I don't think China can afford isolation, Melissa. That's the big difference between China and Russia. And if China wants to play it cute and stay with its newfound unlimited partner, as it calls Russia, again, I stress it will be guilt by association, and the world will begin to reject China. It's already had a trade war and a tech war with the U.S., but it will find itself isolated from the world. And that would really be a major problem for China and for its leader, Xi Jinping, who's looking to get a third term later this year.
Stephen, thanks for your thoughts. We appreciate your time. Stephen Roach.
Thank you.
By the way, is former chairman of Morgan Stanley Asia, which is one of the reasons why we called him. Karen, how do you assess this China risk when you're taking a look at some of the companies that you have in your portfolio, particularly ones that deal with China, have a presence in China, et cetera?
Right. Well, something like a Starbucks, which I don't own anymore, partially because of, because it was expensive, and also China growth, which we talked about last night. I think you brought it up 2 days ago. Is this really a threat? And I think it is. I don't think we're in a time where we could say, oh, no, nothing bad could happen. So something like a Starbucks, something like a McDonald's, which has come down a lot. It's not expensive here, but I think it has excess China exposure versus some other names. As to something like an Alibaba, no shot of getting involved. It's, the history is too painful. Maybe after the break we can talk about when my childhood dog died. That would also be equally as painful as my Alibaba experience. But I can't get back in. I'm out.
Mr. Roach, listen, he's forgotten more about this than I'll ever know. But what I will say is this. I mean, that handshake came prior to the Olympics, or right at the eve of the Olympics, right? We were talking about Russia-Ukraine situation in the fall, and I'm no genius, as you know. So it had to dawn on both parties that something was going to happen there. The fact that they put out a 5,400-word document on the back end of it leads me to believe Chinese are in this, and I don't think they're backing away anytime soon.
Yeah, I'll just say this. I mean, for the first time in a very long time, parts of the world feel uninvestable. We have lots of strategists who come on and say, oh, you should look overseas. It's much cheaper than here, and they're going to come back here. And I mean, China is uninvestable for a whole host of reasons. If you buy into, like, ESG sort of things, I mean, like, so I don't know. It's a really tough spot right here, because I don't know about you guys. I don't really want to invest in China right now, and I don't want to invest in, ADRs that are listed here in the States for a whole host of risks.
You may not want to invest in Europe, and you may not, all these different places. But Tim, does that make the U.S. look even better? Is that some sort of a floor for this stock market? The sort of that there is no other alternative kind of notion?
Well, especially with our dollar getting stronger, and despite the S&P's exposure. And again, if you look at that EEM, emerging markets, you get 45% China. You need to invest around it. And I think that's the same thing in Europe. I think there's some great stories, but just buying the EU stocks 50 is dangerous here.